We're live now. We got the recording going on. Once again, hope everyone's having a good Friday. Hope everyone had a good week. It's been a pretty good week for IFEGs. I know there's a bunch of us now kind of rocking the IFEG setups, and there's a lot of W's going around, which is nice. Some of us trade just New York like me. Some of us are trading London and maybe even pre-market. So, I think what I'm trying to get to here is there's no one-size-fits-all type approach to this. We're all unique. We're all approaching the market in different ways at different times. And even though we might use a similar model, whether it's a unicorn, whether it's IB, whether it's even an IFEG, we're all going to kind of see that picture a little bit differently. Our entry is going to be a little bit different. Our TP and our risk management is going to be a little bit different, right? So that's the beauty of trading. That's what makes trading a very unique and individual process. Having communities like the one Matt has created for all of us with the AshCap Discord just brings all of us together, like-minded individuals, as he would say, or professionals. And we all have a like-minded goal, which is, we want to get payouts. We want to create time freedom. We want to better our lives and the lives of those that are important to us, right? So, and of course, many of us, we're all internet friends, so we're all here to support one another in the sense of rooting for each other and applauding each other's accomplishments, no matter how big or small that might look. And even if it's not an accomplishment and there's a bit of I don't want to use the word failure, but let's just say you hit a roadblock. Everyone's right there to pick people up and stuff. And I saw that the other day. Someone was saying they blew a 25K account or whatnot, and their situation's a little bit different, whereas they don't have enough money to buy a new account. And the thing is, they're like, should I quit? Right? I think some of you might recall these messages that were happening, but my point is, I might as well just jump to kind of the shout out process, which is we obviously have where is it? Achievements. Here we are. So just to shout out Vidal for a sec, but I've known him for a while, and to see him, I think he's blown accounts too and stuff and really hit really tough places, and to see him now get a payout and stick to a process and learn from mistakes it's just a testament of what it takes to get to payout. And then of course the idea of just anyone can do it. What's up, Mr. Spaghetti? Anyone can do this. We all have the power to do this. So no matter where you are in your journey, continue to believe in yourself. And I think when you surround yourself with people who are like-minded, people who are maybe they're just doing things that you want to do, it inspires you, and that at least gives you some sense of direction and purpose, which we need, right? We need that, because before I even knew about ICT, I had no idea how high the bar was set when it came to trading until I joined this community. And then I saw Matt trading, and I joined the premium side, and I realized, wow, the bar is actually way higher than I thought it was. I didn't even know it was there, but that's what we need to kind of kick ourselves in the ass, right? There's a bunch of other people. Abby's here, Harry, Emporio absolutely tore it up. Finally got a 50K. I mean, there's a lot of people here doing great things, And I mean, I just, urge you to just kind of go through and read some of these things, because some people are actually sharing some interesting stories too about what they've gone through to get to certain aspects. And I find that part to be incredibly relatable, even for me to read it. I find it very, very relatable and inspiring, and it makes me want to be better each and every day. So shout out to everybody in here who's sharing stuff. And of course, people are obviously achieving things and not sharing, and shout out to them too, whoever they are. The goal here is just, like I said, try to get the payouts and build success consistently and responsibly. So today, what we're going to do is we're going to go over the market, like a market rundown review. If we have some time, I'll go a little bit more in depth with that stuff. We can review some IFEGs that I took this week. We can talk about today. There was a 3-minute non-singular setup that I did take on eval. I thought maybe it could work, but it didn't. And then, of course, one of the major things I want to talk about was the daily narratives, and just kind of introduce something, because it's not to say that you should use this to like determine your trade setup, like in the sense of confirmations, but it's more about just kind of getting a bigger picture, and it's just like another way to do it. So you know how like we use ERL to IRL with the H4, the daily, to get some sort of a daily bias. This is kind of similar to that, except we're just using session profiles, and I'm sure some of you have already heard about these kinds of things. So an example would be like search and destroy, for example. But kind of having an idea of these things. There's more than just search and destroy, which we're going to talk about a little later. But I wanted to just at least kind of introduce this to everybody. And I always say this in my streams, I love planting seeds, because some people might take it and it might unlock something for them. And for others, it just might be another, piece of education that they can, add to their library and increase their trading IQ. And for me, that's kind of how things have been, especially when it came to these daily narratives, being able to identify it and then understand what might happen. And then when it does happen, you're like not surprised by it because you already knew. So let's get to today. This morning, I showed up to the charts a little bit later than I wanted to, unfortunately. But the first thing we always got to do when we show up to the charts is we need to look at the daily calendar, right? The economic calendar. And, looking at the calendar today, there's not much there. It's all yellow folder stuff. Nothing to worry about, right? And then the next thing I do is I look at higher time frame bias, which I kind of do more for an exercise purpose. I can show you that right here. And if you're not following my higher time frame bias thread, highly recommend to just hit the follow button and check it out, because it's crazy. This is a core foundational ICT concept that I learned from Matt, and it is so important because it actually works. And the more I think you practice, and the only way you can really practice is by putting it on paper and then being able to refer to it. So, for example, every day, like I said, I still do it. I'll show up in the morning and I'll identify what happened yesterday to today. And you can see right here. So from yesterday, I was saying, hey, I'll just start from here today. Today we can see prices respecting off the H4 bullish FEG. So bullish bias remains, internal range liquidity to external range liquidity. That's this. This is from yesterday, right? The 14th. So I was looking for a move from internal to external. And if we go to today, that bullish bias was correct right here. It ended up tagging it, right? And then the next thing we can see is that price actually goes from ERL, which is this external sweep, and moves down into internal, and it takes out this liquidity. Now, whether it rebounds from there or bounces, whatever you want, what terminology you want to use, that's besides the point. All this bias in terms of ERL to IRL, IRL to ERL is just, does price move from one liquidity range to another, or one liquidity pool to another liquidity pool? That's all this is. Of course, you can frame a trade through that, right? H4, 15-minute, 1-minute, daily, 1 hour, 1 minute, or 5-minute. I'm not using it for that extent. I'm using it merely just to see how the bias can function with the H4. And it also just, once again, puts something in my head when I'm trading that, hey, I already know we've swept an H4 ERL, and that on the higher time frame, the bias is to identify and move towards a higher time frame IRL from an ERL, right? Excuse me if I said IRL. That's all that is. Okay, so today, what was I looking for? Today, price is currently in the middle of nowhere, neutral bias, until we start seeing how the candle closes at 10 a.m. to give us a better idea on where it might go during the New York session. And this is what it looked like, right? Price just like blew through some of those FEGs, and now we can see their SIBIs. So this is no man's land, right? There's nothing here. So I need to see some sort of a sweep or something on an H4 on, either direction, and then that will help to provide more context. I do this also for GC. I do this for CL, and those are the three. So that's the next thing I do. And then if you go to daily trading, I will then populate my levels of interest for NQ specifically pre-open. And this is basically the roadmap, right? This is the plan for me personally, because I'm trading off of lower time frame levels for the most part. I mean, they're higher time frame levels, but I'm executing them on the lower time frame, and I can see everything on that lower time frame. So liquidity pools up here, over here, and down here. The plan is simple. Just wait for that level or range to get tagged, zoom in lower to the 1 minute, and start to see if an IFEG forms. That's all I'm doing. Okay? And I know there's a bunch of you that are now starting to implement this into your own practice, and I mean, you can see the results for yourself. Like, you guys are crushing it doing this. It literally can be this simple. And it's not to say that it's perfect. Nothing in trading is perfect. But what you got to try to do is execute the plan perfectly. If you can do that, everything else will fall in line. I promise you. Zana says, one of the things I'm afraid of is losing consistency. I feel like it's really easy to break the rules. You know what? You're not the only one that feels that way. Matt feels that way. I feel that way. I'm sure people like Tempo or Dodgy or Kane or Jade or Lumi Traders. I mean, the list goes on of all these influencer types. I'm sure they all feel the same way too, right? We're all the same. The difference is, like I just said, if you can execute your system or follow your rules to your system perfectly, that's what separates them from anyone else. And those that are taking payouts, you already know what it's taken to get to that point. It's all self-discipline at the end of the day. Like, I'll give you an example. So today, this was my plan, right? You can see my plan was I was waiting for the H4 and the H1 sell-side liquidity levels to get swept. Or I was looking to take a short off the daily EQ. Maybe it's a London high sweep. That was literally it. Okay? Like, initially. So let's just go to NQ for a second. And let's see what happened here. Okay? I got alerts and stuff set, so just bear with me. Maybe I'll use MNQ. Just for the example. Let's go to open. Actually, you know what? I will use NQ just because it's easier. I already have the levels all marked off, I believe. Yeah. So this is the level of interest for me, right? So I'm literally waiting on the 1 minute for price to move either here or move up here. And then I'll take that short, right? So let's hit play, and we see this, and then we see that. Now, I just want to point this out. And I mentioned this, and I said, look at how close the H4 was from being swept. Okay? It was so close. Now, in this situation, I have personally been burnt FOMOing into a position like this, okay? And this is the problem we have with our consistency, in my opinion, because, and we'll use me as an example right now in this situation, because I personally stayed out of this trade. I wanted to follow my rules. My rules were I need to see that sweep. If I don't see that sweep, I'm not entering, okay? So I don't enter the trade. Where's the trade? Well, it's right here. It is super, super clean. I mean, it is very clean. Probably would have been a front run entry when I was looking at this, probably around here. So, I mean, this easily hit 1R, right? Boom. Easily hits 1R. Now, here's the thing. I can look at this trade now and say, shit, I should have taken that trade. I should have just risked it for the biscuit, right? Like, I should have just done it. The problem here now is that the next time this situation happens, I'm going to remember this and remember how I didn't take it, and I'm going to take it. And guess what's going to happen? It's going to go to stop loss. And it's going to sweep that liquidity down there, and I'm going to say to myself, why didn't I stick to my rules? My rules are there to keep me safe. And this is how that loop of, repeatable mistakes happens. The FOMO creates the panic. And then the panic creates the FOMO later. Does that make sense? I hope that makes sense, because in this world of trading, you're playing a game of probabilities, right? Probabilities aren't 100%. Probabilities could be 70%, 60%. It just depends on whatever you're trading. Could be 80%. The thing is, let's just say it's 80%, right? You have a 75 to 80% win rate if you follow those rules. That means 20% of the time you're probably going to take a loss, right? Maybe 25% of the time. But the other side to this is that in that percentage where a price doesn't actually sweep the level of interest and then it goes the other way and it goes to TP, that's also a very small percentage of time that happens. And this is why when you miss out on a trade like this and then it creates FOMO, the next time it happens, once again, I'll just reiterate this, the next time it happens, you have panic in your head. I don't want to miss out, right? That's a bit of FOMO, but it's panic that is driving that. And then, of course, you FOMO into the entry, and then it hits stop loss, and then you're back to panic again. And you only have yourself to blame, right? So whatever your plan is, for me, my plan was I have to wait for this sweep. If I don't see that sweep here, then there's nothing for me. If I don't see a sweep here, there's nothing for me. So this trade goes much further than I thought it was going to go. I thought maybe this was going to fake out here, and then we'd get the sweep. And then we would, see a move go from here and then move way up here, right? I thought we'd get something like that. But the price is going to do whatever it wants to do. You know what I mean? Like, I can have as many projections as I want, but price is going to do whatever it wants to do. And in this situation, price did front run this. And then if you look at what happens here, price then front runs the daily EQ. And now we're stuck even here. Like, if you look at this, like, I thought maybe there would be even a play between 11 and 12 where you would use the New York high, for example. And even that got front run. Now you're seeing my alerts telling me New York high got swept. So that's this level right here. But you can see even this level got front run, and it still ended up going lower. It just depends, like, would you have used, the IFVG here, or, however you wanted to play that. I wonder if there was even SMT there. Yeah, there was SMT. So you see how these things happen, and who knows what's going to happen here. Like, price could continue higher, and then you only have yourself to blame because you're like, oh, I shorted in discount. Let's just keep hitting play because I want to see where price has ended up. So we're at 123. Looks like it's going to sweep right about here. There it is. Okay. So, I mean, here we are now, right? Where we've actually swept New York high. But the thing for me is the daily EQs right here. Okay. So now a little bit more real-time analysis. Am I going to take the short from here, or am I going to stick to my plan, which is I don't short from old swing highs if they're in discount. I short from old swing highs if they're in premium. So I need to see it at minimum the daily EQ get tagged. Now I have an alert set here, so if it does ping, we'll come back to it. But does that make some sense to you guys? Bobby says it makes total sense. If you break your rules and win, it reinforces bad habits. 100%. Well said. Well said. Now, I know some people in here have took that trade, and the thing is that you took that trade and you probably based it off of, say, a 50-minute level, right? Probably this level right here. It's a 50-minute sell side level right here. I'll just make it a little bit bigger. If we go down a bit here, we can see it, right? You get the sweep, and then price moves higher, right? Now, is it on the 2-minute? Is it on the 3-minute? That you're taking the trade off of? Oh, wait. That was the wrong 50-minute. My bad. I think it was this. Excuse me. Yeah, right here. So 50-minute sweep. Yeah, there it is. Yeah. So 50-minute sweep. 1 minute entry. Was there actually SMT on that too? I don't even know. Let's find out. So it looks like the daily EQ has been tagged. Is there SMT? I have no idea. Not showing anything from that angle, but if you did catch it and you followed your rules, congratulations. Honestly, that's all that matters. And this is kind of what I said at the top, right? We're all looking at the same thing, and we're all using our own unique perspective to decide, are we going to go into a trade or are we not going to go into a trade, right? And this is a great example of that. Now, the other thing I'll say to you is, as someone who is looking for that level to get tagged, and it front runs it, and now I'm sidelined watching price go higher, and then of course I'm in the Gen chat, and there's people taking the trade and they were successful. I just want to say, like, this can also create FOMO, seeing other people taking the trade you wanted to take, and what that does is it makes you have a break in your plan, because now you're going to have FOMO. And you're going to start to enter in ways that you weren't supposed to enter. And I've gone through this before. I've learned to deal with my own demons in that sense. So like today is a great example where someone may have seen that. You know what I mean? They might have seen something like that and thought, shit, I missed out. I should have been in that trade. You start saying things like that, catch yourself. And next thing you know, you start entering in ways, like I said, that you didn't plan for. And that can go into what Bobby was saying, right? If you break your rules and win, it reinforces bad habits. So even though I might have had that feeling and entered, and maybe I would have won because price has just continued to go higher, it's still going to reinforce bad habits for later. And down the road, when you start to take on more risk, you're really going to, wish you didn't take that trade and that you followed your rules. Because once again, your rules are there to keep you safe, right? Your system is there to keep you safe, and you don't have to be in every single trade. You don't have to be in every single trade. And for those that are, aiming to get payouts and haven't experienced that yet, truth be told, like let's just take Lucid for example. You need, 5 winning days, that over $150. Okay, think of that as 5 base hits, and then you're eligible for payout. And that's why the 20 trade challenge is so important, because it's helping you to reinforce within yourself what it takes to trade an A+ setup 20 times. Think of the payout. You only need 5 $150 win type days in a row, or not in a row actually, just in general. And if you can stack them, of course, that's better, because then it increases your profit or your buffer. But the whole thing is, you see how it's correlated? So you have to change and shift the things in your mind before you're going to start seeing the results on the screen and in your bank account. Base hits, in my opinion, are the way to go, no matter what. Trying to hit home runs just, to me, doesn't make any sense. If your goal is to get a payout, then I understand it, the potential to hold on to a position, like let your runners ride, things like that, can increase the amount of profit you have in your accounts. But you got to remember, there's also the flip side to that, where think of the amount of energy, mental stress you have to take, right? Think of the amount of risk management that you have to take. For me, if I can get 1R in 30 seconds, 1 minute, 2 minute, like I saw people do today with this trade right down here, 1-2 minute trade, less than 5 minutes, just get 1R. If you risk $300, can you imagine you just made $300 on one account in less than 5 minutes? Think of how many hours people have to work to get $300 US in a day, and you made that in less than 5 minutes. Your perspective will start to change when you start to think of things like this. Like the other day, I made almost $500 in 30 something seconds, and I was like, God is good, and there's no way I need to be trading anymore. I'm very grateful to even have the ability to know how to take a trade like that, and then to have the win be that quick. That's the beauty in this thing. But the next part to that then is self-control, self-regulation. Can you show up the next day now and still hold that same level of, vigilance, discipline, confidence, patience? Because if you can't, you're going to take a stupid loss. It's inevitable. It will happen. So today, even though I had a very good week, today I stuck to my plan and there was no trades on the funded. I took an eval trade today. But, the thing with me with evals is evals, I'm going to be a little bit more risky with it, right? I'm going to take a little bit more chance on those. And sometimes they're going to be good. Sometimes it's not going to be good. It is what it is. The other thing with evals for me is if I take a funded trade, like let's say this actually worked out and it, met my criteria and I got the trade, I got the 1R. Anything that happens after that immediately is on eval if it's during session or if I show up for PM session. Those are eval trades, always. There's no need to risk your W that you got on your funded accounts for more. There's no need. You got the the W for the day. Hopefully it was over $150 or whatever the limit is wherever you're trading, and notch it as a green day. You don't need to show up for Asia. You don't need to show up for Asia. If you're trading New York, you don't have to show up to London. Find one session, stick to it. Find one asset, stick to it. If you're having problems, if you're finding that you're hitting stop loss a lot, if you find that you're liquidating your accounts a lot, can't seem to figure it out, less is more. And I speak from experience when I say this because I've blown way too many accounts thinking I can do X, Y, and Z and that I'm a superhero or that, your head starts blowing up and you think you're hot shit or whatever it is. We're all human. We all have ego. We all have to humble ourselves. I think for me, when I've started to, surrender myself to Christ, that is honestly for me, that's what it took to really, really humble myself. And I'm not putting that on anybody. I'm just telling you what I did and what happened to me. And I've just doubled down on all of that. And that is when I'm reminded of what am I really doing here? Right? Why am I doing what I'm doing? If I do this and I screw up, it is I'm not letting myself down. I'm letting a lot of people around me down. So we have our whys that we have to think about. Jackbit has shared Romans 7:15. I do not understand what I do. For what I want to do, I do not do, but what I hate to do. Powerful. So I'm not trying to turn this into Bible class or anything like that. But I'm just trying to tell you that we all have to find ways to keep ourselves grounded, to keep ourselves humble, to keep ourselves disciplined, to keep ourselves patient. You find a way that works for you, okay? That's all I'm trying to get to with this. Is you find a way to get to that place, okay? Just going back to the charts. Now we are in the New York PM kill zone, and price is literally blown right through the daily EQ, and now we're seeing acceptance. So just a quick little lesson on the daily EQ. I know I was going to talk about a lot of other things too, but I've just kind of been on a bit of I kind of kept talking, a bit of a rant. I kind of go with the flow with these things sometimes, and whatever comes out is God talking, to be honest with you. Yeah, God bless you too, Charlotte, seriously, and everyone else here, honestly. But a little lesson to learn with the daily EQ. When we start seeing acceptance above the daily EQ like this, the daily EQ should no longer be used. Even if price starts to flip and go the other way, we should not be using this level. What we want to see is sweeps going up and then immediate reaction the other way, like a V shape, okay? Not seeing this now, you're best to just wait for London high. And you can see I already got the alert set there, so we're just going to wait and see what happens. I can delete New York high there because that's of no importance to us anymore. Is that high is that? Is that the... Oh, the actual high is way up here. Okay, I'm mistaken. So I'll leave this up on the chart for now. Just double check I haven't missed anything. Sandy says, that's my number one reason for breaking rules due to FOMO. It's real. Bobby says it's a battle, but we have to keep fighting it and focus on stopping it. Yep. Think of it like the enemy, you know? Think of it like the enemy. Like, resist that temptation. Resist it. Sean says, that's the problem for me. I only have evals, so I also try to be a bit risky to pass them, but then I don't have clarity of what's too much risk, and then I end up blowing it. So, you know, I will say this to you. There's, and it's also words that I would say to myself is, like, if I'm trading the system I trade that I deem A+, and I want to trade those types of setups on eval, then I have to do one of two things. I either, you know, pass on taking you could copy trade these things too, of course, right? I personally just kind of hold off a lot of times, and just kind of trade them individually, like one at a time. And it's just my own way of doing things. But what I'm saying is, if you know that your system works 70, 80% of the time, and let's say there's a 50% consistency, like, you don't have to pass that thing in 2 trades. Maybe try to pass it in 3 trades. So break that risk up into 3 trades. That means you have to lose 3 times in a row to blow that account. I find this to be quite powerful way of quickly passing accounts. Now, if you have something like Apex or even another type of account offered by, you know, one of the other prop firms where you can do one-day pass, you could just full port that setup. And it is what it is in the sense of it's going to either win or lose. But it's not a 50-50 thing, because the setup you're taking, if you follow your rules, is putting you in a higher probability of success. So you're banking on that. That's what I would do personally. That is what I do. Let's see. Sean says he felt this way yesterday and today. Yeah, I mean, it's powerful stuff. Spaghetti wants to see my daily EQ settings. So just a quick heads up, you can get access to this indicator for free if you just go to Trading IQ in my channel right here. I've actually shared a couple of indicators. Right here. So Ollis has these are people in our community, guys. Ollis, you guys all know him. He created a checklist indicator. It's free. You can grab it there. And then the actual EQ indicator I'm using, I switched up from the one I was using because Finest created one, and it's actually amazing. To me, it's better than the free one, the other free one I was using. And, obviously it's cool to support people in a community, like especially when it's doing all the things you want. So if you want the indicator, it's right here. In terms of settings, my settings are like this. They're pretty standard. I think the only thing I really changed are just like some aesthetic stuff, and like the name, for example. I just kind of kept it more to a name that I want to see. I think it's preset to like intraday something or another. And then of course the other side is, I think it's the, I think there was a time thing right here. So you might have to adjust the time setting. So I have it set from 1700 hours to 1830 hours. That should give you a proper daily EQ reading. I think before there was a problem. I don't know if he's updated this, so it's like default now. But anyways, it's right there. Okay, so waiting for that to happen. Let me just make sure I haven't missed. Okay, so we did some shout-outs, so we can get rid of that. The IFG today, 3-minute. Okay, let's just quickly go over that. So what did that look like? Let's go to MNQ, 3-minute, and see where the setup was. Okay, so this is the setup right here. And I'm just going to back it up. Okay, so the whole point of this conversation now is, here is a 3-minute IFVG setup, okay? Now, it has swept hourly liquidity from here. You got bearish SMT with MES or ES, doesn't matter. And we are in discount. So shorting in discount. So for me personally, I don't short in discount. So taking a trade like this on a funded account, I'm already breaking a rule. Number two, the second rule break would have been taking it because this is a proper definition of what we say is non-singular. Some people have been asking me about what the hell is the difference between singular and non-singular? What does that mean? Well, this is what it means. You see right here, you have a stacked FEG combo right here. When we take IFEG trades, if say like we market order here, you don't want to see FEG stacked up in front of your trade. You want to see LRLR stacked up in front of your trade because that is proper liquidity that price can reach for. The problem with these FEGs is that they could literally tap the lip of it and immediately bounce the other way, just like this. Now, of course, any trade can work. The probabilities of a success are going to vary, of course. Price will do whatever it wants, whenever it wants, as Matt would say. But these types of trades are the ones I would actually ignore and I would pass. Okay, even if this was inside premium and I was shorting, say, off of the daily EQ or off of London high or Asia high, I would still pass on this because this is what I would say is non-singular. I don't know what price is going to do here. I don't know if it's going to just rip through this and cut it like, like a hot knife with butter. I have no idea. I don't know if it's going to rebound from there and instantly go the other direction. Let's hit play. Look at how well this thing held up. Even here it held up. If I hit, let's just say this is another thing. Look at the size of your stop loss if you use the swing high, 90 points. If you go down here, 64, 70 points. This is too big. Honestly, it's way too big. And I know the candles are really big, but it's just way too big. Now, if I were to have used a tighter stop loss, let's say I used it right here, or even let's say right here. This measures out 1R, right? The problem with this is it hits stop loss before hitting what would have been a TP. So seeing all this kind of play out this way, I already know is not the ideal scenario because I know the ideal scenario is it's a singular setup, so it doesn't have the FEGs here, okay? And number two, it doesn't chop around like this. And it does not close back above the IFEG. It remains, in this case, because it's a short, it would remain below or inside and stay below the IFEG. But when you have that non-singular setup, anything like this is possible. And then watch this. And then that happens, right? So you get my point now with singular versus non-singular? Because sometimes people are taking trades and they're non-singular, and that's fine. I'm not here to tell you what to do, but I don't take it because of this. And I just wanted to point the example out because I know some people have, like I said, had the question of what is that difference between this and that? So this is a great example of a non-singular setup and it failing, and why I don't take trades that are non-singular. Okay, now I ended up taking this on eval, and the reason I took it on eval, and I had mentioned that it's an eval trade only. The only reason I did this, and I'll just show you here, daily trading. See if I can find it. Okay, right here. But on eval, the one big reason I decided to go for it is because there's bearish SMT with ES after sweeping a higher time frame buy-side liquidity level. And then seeing that the IFEG was being respected on the initial pullback. Okay, that's the only reason I decided to enter. Seeing all of this, I thought, you know what? We are creating lower highs. Maybe this can dip a little lower. And, if I do think it's still going to rebound, at least I'll still catch like a 1R. But I took it on eval, a couple $100. It's not going to kill anybody. It's not going to blow my account or anything like that. You know what I'm saying? If I start going crazy now and FOMOing at any given chance to go long, to go short, to go long, to go short, that's a problem, right? That's a control problem. Even on eval, like that's a control problem you have to figure out. You have to fix. Okay. Ashley says, hey, Kira, what's your thoughts on having multiple entries like 1 to 3, but with the same framework, if that makes sense? Yes, you mean like dollar cost average into position, I'm assuming. I think there's only one way I would even consider DCAing into position, and that would be, I mean, like, let's take this trade, for example, because I think this is a good example. So we know that there was a front run here. We know that there was a 15 minute sell side liquidity level that got swept. But let's say you're waiting for the actual closure, okay? You see this candle right here, how it closes way up here? So in this situation, let's say you were not able to kind of front run or chase or whatever terminology you want to use to explain this process, or to explain the action. But let's just say you waited, okay? If I enter here and my stop loss is here, I have 109 points, right? So there's two ways to go about this in terms of the DCA approach, okay? The first way is, let's say you market order entry here, and let's say that your max risk was going to be, let's just say your max risk was 4 contracts. You would want to enter maybe 2 contracts or even 1 contract here. And then you would want to wait and see, like you'd set some limits down here. I would probably just set 1 limit for the next 3 contracts or 2 contracts and see if price dips and tags me in lower. So what happens if I enter here and here? Well, now my DCA entry will probably be somewhere around here, right? And now my stop loss, which was down there, can still stay there. And you can see here, then that's also 1R, right? This is how I would DCA into position if I got a really shitty entry, okay? Sometimes I'm going to screw up and I'll just have a full-size position way up here. And, that happens. And then you have to ask yourself, like, are you willing to risk a little bit more just to get this down a bit more, right? Your actual entry a little bit lower or closer or tighter to where the IFEG was. That's the only time I would do that, though, okay? I always go into the trade looking to take a market order entry full size if everything lines up on that confirmation candle. Now, if that candle can confirm and it's closer to where the IFEG is located, that's the most ideal scenario. But it's not always going to be ideal, and I can't tell you how many times I have to front run trades. And your entry can be anywhere in this candlestick when you're doing that, because with a market order entry, it could give you a bad fill, it can give you a good fill, and this is where then you have to start using intuition and other types of decision-making processes to determine if you're going to add more to your position or not. Okay. SR, what's up? Welcome. I need some info. Can I DM you after this session? 100%. Yeah, hit me up. If you can't drop me a DM, just add me as a friend, and then that should work. And just a little disclaimer. I will never message anybody first, okay? Ever. Unless we're already friends, okay? So if you ever see some stupid message from someone scamming me, or scamming to be me, impersonating me, I have had this happen before. I'm just putting this out there. It's not me. Okay? I will only message you if we're friends first. And if I do message you, you're going to see a message and a tag from me in the Gen chat saying, "Hey, SR, drop me a DM." You'll hear from me in that way, okay? Sweaty Spaghetti gave someone 2 BTCs for a one-on-one session last night. Well, I hope the one-on-one session worked out for you. I hope it worked out for you. It wasn't me, but I hope it worked out for you. That's awesome, man. Another question. Okay, market opens right and at 9:32, for example, your setup forms. Is that too early into open to execute the trade? Is A to A plus in terms of your rules? Yeah, that's a wonderful idea, honestly. Or a wonderful question. Sorry, not idea. Wonderful question to ask, because the problem with entering at within the first 5 minutes of open is you're entering when things are so unpredictable. Okay. Are you putting yourself? I would ask you to ask yourself: are you putting yourself in the highest of probabilities or on the lower side of the probabilities? To me, entering right away is very, very dangerous and puts me away from higher probability. I would rather let price develop a bit and then see, because there's tons of fake outs, tons of weird wicks that can happen, right? We've seen this happen. Now, don't get me wrong. Sometimes a trade it'll just look too good to be true to pass up on. And I mean, I'm not going to lie. Sometimes in the first 5 minutes, I have taken a trade like that and it has worked. But you have to be very, very careful when you do something like that. Okay? So I would just say, if I were to recommend anything, it would just be let price open for the first 5 or 10 minutes and play itself out a bit, and then look to form your trade. Because the best trade is not going to happen within the first 5 minutes. It's going to probably breathe a bit and occur after. Usually, I see these trades happen in that 10. I mean, if we're going to go into like things like macros, like time macros, usually would see it around 9:50 to 10:10. That's roughly the best time I find to get those trades. If you look right here at the trade that was taken right here, look at what time it was. Right here. And then your entry is right here. Or even here, you could say. Whoops. 9:47, 9:51, right? You see what I'm saying? 9:50 to 10:10. That's the macro. It's there for a reason. You know what I mean? There's always going to be more volatility towards the end and beginning of the hourly closures on those candlesticks. Zanu's already blocked 15 Ash and Kira's. Oh my God. That sucks. I can't believe that's happening. And he says he also lost yesterday because he front run the first candle at 9:30. You know, everyone's been kind of joking around saying just long at open. Just long at open, you'll be fine. Blind long, right? I think even Matt was joking around saying that. Just long everything. But I mean, that's a gamble, right? That's not really trading. That's gambling. So be very, very careful. Ash says, understood. So rather skip or maybe use less risk and wait 5 minutes after open. I took a setup that won today, which was a few minutes after around 9:33, which played out. Use less risk, which felt like luck more than actually a high probability trade. I would throw this back to you and say, what were the criteria to your trade? Like, what was it that you saw that made you say, hey, I'm going to take a position at 9:33? Like, what was your higher time frame level of interest? What was your entry trigger and time frame? I put those questions to you. If you want to open up and answer those, we can talk about that. Grab a sip of coffee in the meantime. And also just want to say once again, I appreciate everyone's time. Appreciate you being here with me today. Honestly, I really do. I feel very blessed to be able to, just to have this opportunity to even live stream and be asked to do something like this from Matt. It's just like he's my mentor. So like it always humbles me. I'm just truly grateful. There's a lot of amazing people here that I've met, and I'm grateful to know all of you, honestly. And I feel so inspired seeing so many of you sharing wins, sharing success, and even just opening up about things that are hard. I think that honestly touches me and inspires me. So just a shout out to all of you guys, seriously. Alice, you're late again, man. What the hell, bro? What the hell? Yeah, W's all around, man, for sure. And it's not just me, it's everybody, man. It's everybody. There's a lot of good people here. A lot of smart people. Thanks, Sean. I appreciate that, man. Thank you. And yeah, Ashley, drop some answers in the chat for sure. Whenever you're ready, I'll come back to that, okay? Unless you post it right away. Okay, so that was the 3 minute setup. That was a loss. Let's just go back to NQ for a sec. Where are we with price action? Yeah, health first, man. You got to take care of your health first. If you don't, you're going to end up doing bad things on the chart. You're going to be no good for yourself. You got to be your best version of yourself. You got to be ready. I find for myself, those days where I'm up at 5 in the morning, I'm literally at my desk, probably around 7:15, 7:30. I find those days I'm way more locked in than other days where I'm working from home. And I might, like today, for example, I had a very late day. I slept in. My alarms I just blew through my alarms for some reason. And yeah, you kind of rush when you get to the charts. You don't feel as calm, as peaceful. So I'm just saying this because if you have a routine, hopefully that's one that gets you to the charts early, gets you relaxed. So when 9:30 hits, you're all ready to go. You already know what your plan is. You're calm, you're collected, right? So, okay, so Ashley says, well, we inversed an H4 internal range liquidity pool and a 15-minute change of state delivery, which is the higher time frame POI, into a 1-minute change of state delivery, which did play out on ES and NQ, but executed on ES. So it was an ideal setup, really good according to my rules, but I felt it was really early. Okay, well, let's just quickly talk about that for a sec. So 4-hour internal range liquidity. Okay, so right here, I'm assuming you're talking about this right there, volume imbalance. Okay, so there's our H4. This is the 6 to 10 candle. Let's go to the 15-minute. 15-minute change of state of delivery. So where is that? That would be right about here. (15-minute) CISD. Okay, so that would have been in the first, right at open actually. Actually, would that have been your candlestick? Because it only confirms here, so I'm assuming it's actually going to be down here. That would have been your CISD at open, because none of this would have happened yet. It was actually a short. Oh, okay, I'm sadly mistaken then. Okay, let's try that again. A short. Much cleaner on ES. Okay, let's take a look at ES. I'm just trying to find the FVG, because I don't see it. Am I missing something? Because I see a bullish FVG here. I see a bearish one here. Bobby says if the 9:30 open creates the manipulation that drives price to your predetermined levels, then your entry function isn't going to occur until a few candles later automatically. That should help keep you out of entering on that first 9:30 candlestick. Yeah, I mean, great logic, right? Great insight there. We have to find mechanical ways, I think, to combat the FOMO and the panic. And having written rules, like you guys know, I had a checklist here for a while. I've taken it off, but Alice, I already told you, he shared a free checklist that he created. It's actually pretty sick. You get it in my Trading IQ section for free. Use that on your charts, because when you put it up and you see something visually on your screen saying, you're breaking a rule, or that you're playing by all your rules, that visual reminder is enough to deter you and to get you thinking and to not basically, jump off a cliff. It inversed a bullish FEG. Okay. Okay, so you're saying because price ripped through this level here, that gave you a bearish bias. Okay. Sure. I'm just trying to understand how you put it together. It seems a little bit, I'm just saying for me, it seems a little bit upside down for me with how I would have read it. That's all. It's not to say what you did was wrong. I'm not going down that road. Yeah, maybe our definitions of changes to delivery are also different, because I don't actually trade this model that you're trading, right? So, you know what? If you have a chart, that would be even more helpful. Oh, there you go. Okay, perfect. Yeah, okay, so we got to that part with the H4. Perfect. And then okay, hold on a second. So you used a bullish 50-minute CISD or a bearish 50-minute CISD? Or would we say it's a CISD, or is it more of a just so much more as an order block maybe? Because if we have levels here, they go up. There's one here, goes down, goes up. There's a level right here, right? That would be like an order block, more so than I guess what I would say is a CISD. Because to me, price is reversing, so you'd be looking for like bullish change state deliveries. The bearish change state delivery is way up here. Actually, probably about here. You need a sweep though, right? So. Okay, order block. Let's just mark this off like this for a sec, and then let me just see if it's the same level. And sure enough, it is the same level. Okay, so we're on the right page. We're right here. Okay, so I got to where you got to now. That's interesting. So to me, I wouldn't say that's a 15-minute CISD personally. I would actually just say it's an order block. Only because the CISD would have happened at the reversal. If you're using 15-minute, it would have been way higher. So to me, that's more of like an order block where price is just kind of, making market structure breaks a structure. Excuse me, let me say that again. Price is making a break in structure, and then kind of coming back, and that's where you have that level, which is an order block. But yeah, right here, it comes back up to that level. Sure, EQ of the H4, bullish FVG that got inversed. Yeah, that's an interesting setup. That's a very interesting setup. And then there's your lower time frame CISD. So I can see that lower time frame CISD because we have, lower low, and then we start seeing break of structure on the lower time frame, and then you have like a higher high, higher low, higher high, right? So then when you start to rip through that to me is definitely a change state delivery on the lower time frame. Not bad setup. Look at that. But okay, so the question here was entering at like 9:30, right? Because you can see right here, this is 9:30, this is 9:31, and then confirmation at 9:32. I mean, that's I think the invalidation here is pretty obvious, right? Once you start seeing acceptance above here, because it's respecting the EQ of the H4. You can see here it's respecting it all over here. So this is like a pretty decent support and resistance level, if you even think of it that way. So, I mean, if you are entering here, that's your invalidation. I mean, I can see how that makes some sense there. But for me personally, my brain does not compute the model in this way because I just don't trade this way. And looks like Bjorn saying there's SMT somewhere. Oh, and please don't apologize, Ashley. These terminologies that we use are only there to help illustrate points. They could be called this or that. To be honest with you, it's all ICT at the end of the day, and I'm not trying to act like some sort of expert when it comes to this kind of ICT talk or anything. I think it's just more or less just making sure we're all on the same page with whatever we're calling that, right? Whatever we're calling it. It doesn't even matter. Okay. I don't know. I hope I did kind of answer your question though there, Ashley. Hopefully I did. If I didn't, just tell me. It's fine. We can still talk about it. I mean, that's the whole point of these live streams is to answer questions, show things, talk about things. And once again, like I don't trade the way you guys trade, right? You're gonna see things I don't see. You're gonna put things together in ways I don't necessarily, I might not relate to, right? Like I'm an expert in what I do, in how I trade and how I put things together. And I think that's the key is like each of us has to become an expert in what you do. And if this is the way it works, then like that's the way it goes. What's up, Don Pablo? What's going on? Okay. So let's transition from that. Let's go to, you know what? Why don't we just jump into daily narratives? I've been talking for about an hour. Unless there's something you guys want me to specifically talk on, let me know. But the tutorial aspect of things, I did want to talk about IVGs actually that I took, but I feel like I share everything on in my thread, and I've shared everything in the Gen chat and everything else, so it's all there. You think I'm about to miss a trade? What? Oh man, FOMO's kicking now. Oh, because London is getting tagged. I didn't even get an alert yet. Alice, you're my alert, bro. Oh, there's the alert. Look at that. You front run the alert. Iman, what's up, brother? There's another baller in the chat now. Iman, I'm going to put you under the microscope for 2 seconds, okay? Can you tell everybody in the chat what is the biggest lesson you learned on how you went from being unprofitable to profitable? What is the one thing? Put it in the chat. And how did you get better at your risk management? He put 1 risk management for anyone listening to this on a replay. Follow your plan, he says, no matter what. So I would just put that to everybody here right now and say, when you show up to take a trade, is your risk managed? Are you following your plan? No matter what. Ask yourself those questions. If you recall, I put this in the trading IQ section, and I said, ask yourself these 3 questions every single time you show up to trade and at the end of your trading session. Did you follow the rules to your setup? Did you manage your risk correctly? Did I exit according to my plan? If you can answer these 3 questions honestly, whether you did or you didn't, this is going to help you down the road. I promise you. Because anytime you take a losing trade, there's a good chance you did not do one of these 3 things. And anytime you have a winning trade, I can guarantee you probably have done all 3 of these things. And Iman's saying, man, years with 0 payouts, and now I'm getting payouts every Friday. Like I said to you guys at the top of the session, it's all possible, right? Like, it's all possible. When you start to understand, like, the nature of how to play this game, it's not about home runs. It's not about showing up and being on the chart for 24 hours in a day. It's not about that. It's literally about less is more. Managing risk. Managing your mindset. Right? Understanding those feelings. The sad reality is, and I say this because we've all had to go through these, fired hula hoops, that you have to fail a lot in order to succeed. You have to feel the real pain of this thing, like losing, breaking rules, FOMO, like you have to experience all of that shit so that you know what to not do and what it takes to win consistently. So, congrats to Iman as well. Another shout out to him. And if I've missed anyone with shout outs, I apologize. Feel free to let me know, man, because I think it's good that we celebrate people who are winning and that want to, obviously share these things. I think it's important. So, let's go back to NQ because I don't want to miss a setup for Alice. Alice is gonna have my head if I don't share this trade. Okay, let's just look at the analysis here for 2 seconds. So, London highs swept. What are some key things we're looking for in a trade? Okay, number 1, I'll just map it out like this while we watch this trade. Number 1, we want to see, we want to be, time is one thing, right? So we could say right now we're in the New York PM kill zone, sure. Number 2, premium discount, which we are above the daily EQ. We have a key higher time frame level, okay, which is London high. We want to see an instant reaction off that level, and then we want to see good momentum through confirming IFVG. IFVG size is important, right? I want to see plus 5 points. Now, the flip side to this, too, is we don't want to have an IFVG that's size 50 points, right? We definitely don't want to see that. We want to have IFVGs that are sized, 5, 10, 15, 20 points. That's the sweet spot. Because then what happens is your stop loss is going to be roughly 40 points or so, maybe 50. And NQ can definitely move 40 to 50 points pretty quickly. That's 1R. See what I'm saying? Appreciate you, Iman. Respect to you. Respect to you. Ashley says, as a CFD trader who solely trades NQ and ES, would switching to futures be much better? Sorry for all the questions. Never apologize for asking a question, honestly. Never apologize for it. In my opinion, I say yes. And the reason being is that your fills are going to be better. And I've traded NQ with a CFD, so it wasn't NQ, it was NAS or NAS 100, and my fills were shit. I would get stopped out prematurely because of the liquidity, like the way the bidding was done. Sometimes my entries were front run on a perfect trade. When I've moved to futures, don't have that problem. Like, yeah, things get front run and stuff, but not due to volume. Like, if that level gets hit and my limit was there, there's a good chance I'm getting tagged. If the price doesn't go to that level and misses it by 1 point, that's a front run. That happens. This is why I like market orders. So my suggestion is, I think it's also cheaper to trade with futures given the competition that's out there right now. The price point's cheaper. I've used the fivers, and then if we look at things like FTMO, it's really, really expensive. I've even used crypto prop firms, one called Crypto Trader Fund or Crypto Fund Trader, and that was even more expensive. There's another crypto one called Breakout. If I compare those prices to what the futures prop firm space is looking like, I mean, you can get a Lucid account, a 50K Lucid account for $85 right now. You can get a Funded Next account for $69 on sale right now, which is a 50K account. Don't get me started on the prices for 25K accounts. Is way cheaper. You can't find that type of stuff with CFDs, in my opinion. So your cost of entry is way cheaper with futures. The other thing to this too, which I'll also say, I've also traded on MT5. I still have CFD accounts. MT5 sucks compared to trading on TradingView, honestly. I love trading on TradingView compared to using MT5. MT5 is just such a pain in the ass. Oh my God. Horrible. Okay. And then, of course, number 7, draw on liquidity, right? Price has to reach for something. And then, of course, if we get things like SMT, that's a bonus, right? Actually says, and copy trading with CFDs is such an annoyance. Had to make my own copier just because the rules to copy trading is a pain. How's that with the futures? Well, if you want my personal opinion, if you click the link on my bio, I'm just going to plug this in. Tradecopia. I think you get 30% off, 7-day free trial if you're new. To me, that's probably the best trade copier I've ever used. It's not cloud-based. It's platform-based, meaning you can only use it on a single computer. I've used TradeSyncer, and unfortunately, I've had to continue to use TradeSyncer over Tradecopia just because I'm not always trading on my laptop. I'm trading on a different computer sometimes, so I have to use the cloud, which is TradeSyncer. But what I will say from my own experience is I've had less slippage issues trading on Tradecopia versus TradeSyncer. So if I were to recommend one over the other, it would be Tradecopia all day. And that's why I have it here as a affiliate link. So if you'd like to use it, my link's right there. I would appreciate your support. Way to go, Bjorn. Look at that. $1,800 W. Sniper in the house. SR also hates MT5. Yeah, it's a pain. It is what it is. Let's go back to this trade for a second. Okay, so I just want to point out. So we have a lot of these things happening here. Is this a good reaction? Not really. Is there an IFEG here? I mean, there's one here, but it's not that good. Let's go to the 2-minute. Got a little space right there. What's that look like? That's about 2 points. So not interested in that. And then the 3-minute is the highest time frame I will ever go up to. We can see that we now have SMT with ES there too. So how do you trade something like this? Well, that's one way. All it says, go to ES. But for those that are only trading NQ like me, I have nothing to do here. Now, there is a level here. But what I will say about this is what makes it riskier is that it's too far away from the actual London high. So that is risk number one. How many points is this thing? 5.25. Yeah, pretty risky. What I ideally want to see is that IFEG form here, right? And then I can start targeting that daily EQ. Now, granted, the daily EQ is still here. So if price is starting to accept below here, that's good. There is an FEG down here. We have a swing point right here. So that's good in terms of liquidity. It's not a non-singular setup. This would be a singular setup, right? But it's risky because you're away from a protected high, so to speak. Your stop loss would be, presumably, it could be here. That's 14. If you want to have a little bit more risk, it's up here, 24.5, but it's right inside of an FEG here, right? Like, if this gets filled here and then it goes lower, I mean, that could be pretty good. But to me, the target or the goal would be this daily EQ. Me personally, if I'm looking for something like A+, I'd be looking for it higher up. It looks like MNQ. It looks like MNQ actually had a better setup here, and this brings up another question, right? Like, is that the same chart? What are you? Oh, you're on the 2-minute. Okay, so probably looking at this gap right here. How big is that gap though? Yeah, like 1.75 points. I personally wouldn't take that. Everyone's entitled to do whatever they want, of course. It's not to say things don't work, right? Anything can work. It just depends on your level and risk tolerance. So we can see prices now flying through here. So this is a great example where you got 40 seconds and you want to front run this, but look, how do you front run that? You can't. So I think this has showed a couple of good things, okay? Number one, this is actually good because it's live. Number one, we talked about time. We're in the kill zone for the New York PM. Great. We're a premium and discount. We're on the right side of that. We have a higher time frame level, which is London high. Look at the reaction off these levels. Like, this is why I use these levels. The probability and chances of getting a reaction like this is very high when it comes to these levels. And it doesn't even matter in terms of like the kill zone. You know what I'm saying? There you go, Alice. Well done. And this thing is just dumping. Holy moly. In terms of like instant reaction, good momentum, I mean, this is pretty decent for what I would say is, somewhat of an instant reaction. It's not the best, but it's still good. Like, it's not like that many candlesticks, right? Where's the entry? For me, there would be none. Like I said, it would have been this, but I would have had to front run this. And this thing gave me no chance to front run. And then now we're already at the daily EQ. Another problem was the IFVG size. So like for me, this one's good, 5.25. But if I look up here and when we were looking at MNQ, it was like less than 2 points, right? So for me, that's not favorable. I would pass on that. The other thing I also say is when we look at NQ versus MNQ, I personally will not chart off MNQ. So like that IFEG that was right here on MNQ, right? put it up here for a sec. Where was it? It was on the 2-minute. So you have this right here, right? So we know it's super tight, super small. Let's just check out NQ for a sec. NQ did not have it, right? On the 2-minute. It had it a little bit higher up, it looks like. Would have been about here. But once again, it's the size, right? 2 points. Like, I can't take that IFEG seriously. But once again, still a very good reaction. I mean, hey, congrats to you guys, honestly. And today is one of those days for me personally where I'm watching levels get front run. I'm watching something like this happen where it's like I like the level that's being taken. I like everything about the trade. There's even SMT, but where's the IFEG that, you know, works for me? And it's not there, and I can't do anything about it. So as a independent trader, I'm sidelined. Even on an eval account, I'm still sidelined. You know what I'm saying? See you, man. Peace out, brother. Look at that. Comes, gets the W, leaves. That's amazing. But, you know, we waited for these levels all day, right? I talked about London High. I mentioned this. Like, I mean, I've mapped it out right at the start of the day. I shared it. Let's just go back to it. Here it is, 9:17 in the morning. Here are the levels. I'm looking for reactions off these levels. These levels work, and you don't have to overcomplicate things. These levels work. Either here or here. If we go back to the chart, that's London High. Perfect reaction. Now we're sweeping the daily EQ, and we have bullish SMT. So now we're going the other way. This is hilarious. Volatility seems to have entered the market. Is there any news or anything? Can't see anything. Now, if we look at what's happening here, I mean, this is a good day because we can actually analyze live price action. But, you know, we have this massive FEG here. But once again, you see this thing right here? This is what makes it non-singular. Right? That was another thing I forgot to mention up here. Number 7 was actually non-singular. Or sorry, not non-singular, singular. Brain fart. Right? So this is huge. 31 points, it's pretty big. But what I don't like is this. Right? But pretty good reaction. I wonder what the 2 minutes looking like. Much of the same, much of the same. But these levels, if you just observe them, H1, H4, ERLs, Asia and London highs and lows, previous day highs and lows, and the daily EQ, all you need on your chart to worry about, in my opinion. If you just wait for those levels and then zoom lower like I am on the 1 minute and just look for something, like an IFEG setup with some specific nuances. To me, it's the best model. It's the best model. It's the quickest model. You know what I mean? So if we go to ES, what's really interesting too is another thing I'll bring up is whenever we're kind of, you know, forming these trades. And setting them up. Okay, now this is the 15-minute time frame, okay? What we want to make sure is ES is also correlated with NQ. Now you see it's not on my checklist here, but this is a little tip. You should always have a split screen open to identify what ES is doing, because when NQ sweeps London, you notice how ES is also sweeping the daily EQ. So there's correlation in the sense of the level itself, because we know this level is a massive support and resistance level, right? So if I want to short NQ, I want to see ES moving off of a key level that can be reacted from as well, right? The problem that we have now is that NQ is above the daily EQ and ES is below it. So what that means now is if ES were to continue to go lower, it's probably going to drag NQ down. If ES starts to reclaim this level and maybe reach for London high, then there's probably a good chance that NQ will also move higher, right? And support this bounce. We want to make sure there's correlation between these two assets as much as possible, okay? The only time where we want to see things uncorrelated is when we get to a key level and there's SMT, right? That's when we're okay with things being uncorrelated. So right here you can see that there's... Actually, I'll let the indicator do it. Will it do it? Oh wow, it's not showing it. That's hilarious. Well, you can see right here, NQ has a higher high and ES has a lower high, right? So this is actually really good. This was a really good short on NQ. I just wish it showed something. Like it showed something that I could sink my teeth into. And by waiting for confirmation here, I mentioned I wasn't interested in this anyways, but I just want to show, it's just little tricks. You got to wait for confirmations, right? For things to close. Don't just take it for granted that it's going to close, right? And now price is obviously disrespecting the daily EQ and going lower. Reaction off the daily EQ. So really, really nice correlation there. We got good good criteria aligned with this thing, with the SMT. SMT is so powerful. It's not mandatory for me, but man, when it shows up, I love seeing it. It just gives me extra confidence that the trade is going to head in the direction that I might intend for it to go. And you can see here now we got 50-minute bullish FVGs forming here, right? So not bad. I just wish there was something clean here, right? Something like what we saw earlier today on NQ, like this. I wish we saw something like this up here, because that would have been a nice trade to have taken on an eval. So the New York PM kill zone is about 1:30 to about 4, I believe. The New York AM kill zone is like 9:30 to like 11:30ish. I like to wait and see how the New York high and low plays out, which ends at about 11. I like to see if that level gets swept sometimes to catch a trade. So you got 2 hours in the morning. I mean, no one's asking you to stay from 1:30 to 4 in the PM, but if you show up for 1:30, if there's usually a setup, I mean, you probably might find something within the first hour or two. And then, of course, it gets trickier. I mean, not to say that trades can't happen later in the session. It's just, do you really want to be sitting around waiting for trades to play out? If you're studying, different story. If you're stuck on your desk and you're studying, different story. But that's just what I've noticed, because I have sat at my desk just like looking at the charts, analyzing it, because I have no choice. I'm just stuck on my desk anyways, working. So anyways, anyone have any questions about this? Anything we've talked about here? Anything we've analyzed here? All clear? Sick. Nice. Okay, Ashley, another question. Go for it. When it comes to IFEGs, I've been in your few lives and heard you say you don't take IFEGs where the gap is less than 5 points or so. Why is that? I think the reason being is that it's all about stop loss placement, right? So if I have the IFEG system theoretically that I don't want to see price close on the opposing side of my IFEG that I'm using, because my stop loss is going to be on the other side of that, usually a little bit tight. If that stop loss, if that IFEG is only 4 points or 2 points, I have to be very mindful, because then I got to start using swing points, right? And that might start to go against the model itself, because I'm trading an IFVG model, right? The whole point of it is I don't want to see price start to close back on the opposing side of that IFVG. And then also the other side to it too is that if you can start seeing price rip through a decent sized imbalance like that, that's showing you momentum. You can't really understand, or let me rephrase, not understand. You can't exactly determine the momentum if the IFVG is less than 5 points. And once again, it doesn't mean price will not go where it's going to go, like it did here, right? It's going to go where it's going to go. But remember, I wasn't using MNQ, right? I wasn't using the NQ super tight small FVG here. I was using this one. Remember, there was one right here that I identified right here. This was the one I was looking at. So theoretically speaking, if price is going to confirm an IFVG setup like this, it should not be closing back above here. And as you can see, this thing just sliced and diced to the daily EQ and lower. Nice reaction off the daily EQ. So I hope that makes some sense. Where could I find your indicator list with the settings? I join later on. Yeah, no worries, buddy. So if you go to my channel, TraderX Kira, if you go to if you go to Trading IQ, and you just start scrolling up a little bit, I have my stat map settings here, and then if you keep going a little bit higher, I have my IFVG Pro Plus indicator settings here as well. So it's all there for you. I'm assuming that's the indicator you're talking about. All it says, I read an article about FVGs and how they represent leftover orders that price later returns to fill. It said once an FVG is tagged or filled, you should ignore it. I think a common mistake is people keep trusting the same FVG even after it's already been mitigated. Brother, I am on the same page as you there. If an FVG gets mitigated 100% or near 100%, to me it's no longer valid. If it's only partially mitigated, like say 50%, to me it's still partially unmitigated. I would still respect it. But if it's 100% respected and price is coming back to that level, I personally do not adhere to that FVG. To me, that FVG does not exist anymore. Some people do, and there's nothing wrong with that. I just personally don't do that. So I would agree with what you got there, Alice, 100%. Holy, look at the dump on this. Crazy. Absolutely crazy. Absolutely crazy. What a dump. How many points was that? 170 points. My goodness. On your IFVG notes within Trading IQ, it says the gap should be 50 to 40 points. Just wanted to let you know, just in case you wanted to make a correction. Yeah, the reason I put 40 points is because, you know, like when things are super volatile and the candles are really big, so your FVG is going to be like sized appropriately or applicably to the size of the actual candles. That's sometimes where 40 points, I'll take it, because if a single 1 minute candlestick is 50 points, then having a 40 point IFVG is not that big of a deal, right? Because the position is going to be massive in the first place. It's an additional risk you take, right? But you have to work with what the market gives you. To me, the ideal scenario is when you have like 5 to 20, maybe 25 points. But given the way the market's working, I pushed it to 40 because I just wanted to give myself some leeway. Because I don't mind personally sometimes taking a 40-point IFVG size setup and having a 50 to 55-point stop loss. If I know it's early in the session and price can go 100 points. If I'm looking at price and it's already moved in one direction a few hundred points, like, do I really want to try to take a risk anticipating for it to move another 100 points? Probably not. If it starts reversing from a key higher time frame level like this, For it to move 100 points the opposite direction makes sense, right? It can do that because there's loads of liquidity built up here, right? Now, the other thing I'll tell you guys is LRLR. Remember I said about when you have non-singular versus singular? This is all non-singular. Look at how price reacted. It literally sliced through all the liquidity, taking all the LRLR here. That's the difference. I was talking about this. This is now, you're seeing a live example of that happening in real time. Hope that makes sense. Why was the 3-minute BPR at 10.24, which finally got inversed at 11.30, a bad one to take? Was this the short? Long. Okay. Let's go to your time. So 3-minute BPR, are you talking about... So 10.24... Oh my goodness. Okay. Oh, this one right here. 10.24. Okay. So you're talking about this, right? So, okay. Never thought I'd end up hating to take profit in 14 seconds. So, before I go on to the chart, Alice, this is you bring up a really good point. So, if you're taking 1R, this is partially one of the challenges you're going to face as a trader, is that you're going to look at price and go, why did I take profit so early? It's another form of FOMO, okay? You just said it. The FOMO is hitting hard with this move down. This is part of what happens with taking 1R trades that play out very quickly. You have to remember your goal was never to catch a home run. Your goal was to meet the risk, right? So if my risk was $300, my goal was to just make that $300. And remember, when you start to copy trade things, it's not $300 anymore. The only way you can kind of combat this is to get into the idea of skimming profits and then letting your runners ride. That's the only way to combat this. So you either deal with it, it is what it is, or you adjust and you start to skim profits. So when price hits 1R, you're taking, say, 50% off the table and you're letting the rest run. Is it always going to play out like that? No. But you yourself are going to have to figure that piece out. You know what I'm saying? I've been in that position where I was initially skimming profits at various TPs, and honestly, it stressed me out, man. You know, it stressed me out. I think the only thing I would say about the 1R side of this is if you are looking at a trade, let's just go back to this for a second here. Let me go to the 1 minute. Okay. So if I was taking this trade, and let's just say I took it off that 2 minute gap, right here. So let's say my entry was about here. My stop loss, is it 32 points? Am I going to use that super tight position? Am I going to have it like 18 points? Let's say I used 24 and a half points. Okay. Now, if I know 1R measured here is about here, but I know my drawn liquidity is the daily EQ, why not just set your stop or set your TP here and see if a knife drops, right? And then you would then get 1.72R. So instead of setting that TP with a hard TP here at 1R, you set it here, and you identify where the 1R is, and you can keep your finger on the buy button because you're shorting. That the second price goes there, you can look to see what the reaction is, because if the reaction is like immediate response off that 1R level, you could just say, all right, I'm taking my profit with a market buy order, right? On the flip side, you know this daily EQ was a major level to take profit at, right? So you set the hard TP here. And what that does, like I said, is if it does end up falling like a knife, this one candlestick, which we watched together, takes you out at 1.7 instead of 1. So you get an extra 0.7 out of it. That's how I would have played this personally. If obviously I was to take an IFEG setup like this, I have done this. I mean, there's plenty of times where I take more than 1R on a trade. But it's only if I'm thinking price can reach for that level and it's fairly close. What I don't want to see is like, this daily Q being way down here, because I don't know what's going to happen with price from here to down here, right? Anything can happen. But when you're dealing with 41 points versus 24.5 points or 25 points, just why not take that extra risk and see? Because the worst thing that happens is that price hits 1R that you have marked and you just move your stop loss to break even. And you wait and see what happens. You know what I'm saying? Hope that helps. Should be happy. It's the thing we're gonna battle as traders. We're so greedy. We're so greedy as traders. It's a natural thing to feel that greed. But I can tell you that greed is not doing you any good. As normal as it is to feel it, it's not doing you any good. And this is why I was saying earlier, you got to find ways to keep yourself humble and grateful and thankful for what you have and what you're able to do. Because even to get 1R is a big deal. You know what I'm saying? Like 1R is basically 100% of your risk. Think about that. Another thing too is perfection. You're not perfect. Your trading will never be perfect in the sense of where the price goes, like how far it's going to go, or if it's going to hit stop loss. Like there's no perfection in sniping, Pico, like Pico higher lows and taking profit right at the, extremes of that move. Trying to predict that and to, aim for that perfection is not good for your mental health. But anyways, I will say congratulations though, because you did catch a W. You caught more W's today than I did. And I'm not jealous of you. I'm happy for you, brother. So, you caught more W's than me. And I love catching W's. But I also love watching other people catch W's too. You know what I'm saying, brother? Okay. I know I've been going on for a really long time. I was going to talk about daily profiles, and then this trade thing happened. So, that to me took priority. What I will say is, let's just quickly touch on it, and then maybe on Monday I'll go over more of it. The idea, does anybody know about daily narratives and things like that? So an example would be like, say, search and destroy. But there's other things too, right? Does anyone know about this kind of stuff? If you do, let me know in the chat. Okay, so here is a cheat sheet. I've had this cheat sheet for years. If you go to this guy's Twitter, his name is Dang Strat, and just type in narrative in the search field for his tweets, you'll come up to something like this. He's got a few of these types of PDF images, but he's done a great job, in my opinion, of putting it all together like this. But you got 4 different types of profiles. Okay, so you got the Asia range, London manipulation, New York reversal, right? So this is also known as like a classic buy day or classic sell day. You also have Asia expansion, London consolidation, New York continuation. Then you also have Asia range, London expansion, New York consolidation. And usually this we identify with that overnight move, right? So when price makes a massive overnight move, we should be anticipating consolidation during New York. That's this. And then, of course, we have the most common one that Matt's talked about, which is search and destroy, right? Charlotte, no, I personally did not get into the trade. I was looking to see if something would work out for me, but it looked like it worked out for some other people. They decided to enter it based off of, there was an IFVG there. It was just whether you wanted to take it or not. Yeah, so I think it was on the 2-minute, if I'm not mistaken. So search and destroy is right here. Search and destroy is when you have Asia create some sort of a range. London then sweeps both sides of that range. And then when New York opens, New York will take out one of those sides and trade back to equilibrium. That's known as search and destroy. Okay? So looking at this, when we show up to the market, if you can identify correctly what London and Asia are doing, it might give you a crystal ball in understanding what might happen during New York. See how powerful this can be? So you have to learn to train your eyes to see these things, because when we're looking at this with, blue, red, and green boxes with a line drawn very cleanly, it doesn't always look like this. So I took some time earlier today just quickly to see if I could find any of these things with what price is actually doing, so you could see what it looks like with real price action. I'm going to go right here. I put this together for everybody. So let's start with search and destroy. Okay, right here, great example. Let me just zoom in a little bit more. Okay, so here's search and destroy. Asia is consolidating. London raids both Asia high and Asia low. And then New York is going to raid either the high or the low of London and Asia, and then work its way back to equilibrium. And right here you can see we raid one side and we move back to equilibrium. Really good example. Okay, this happened, I think, on, actually I don't even know what day. Actually right here, April 7th. I got the date there, so you guys can go check these dates out too. I don't think I caught it on this one. Let's look at a classic buy day now. So classic buy day. Classic buy day is where we have Asia consolidating, London sweeping one of the side. Well, in this case, it's classic buy day, so it's going to sweep the London or the Asia low, and then when New York opens, we're going to get that reversal, and that's what's known as a classic buy day. This is one of the most common, daily narrative profiles people look for. Is exactly this, and you'll probably see this on Twitter with a lot of people where they'll say, London accumulation, manipulation, distribution, right? PO3, AMD, whatever, right? That's this, right? Accumulation, manipulation, distribution. So you're seeing it with real candlesticks. I'm using the 50-minute time frame on this just because it makes it a little bit tighter to see. Okay, let's go to another one. So this one right here is, I just titled it Expansion, Consolidation, Continuation. So that would be basically this. So Asia having expansion, London consolidating, and then New York continuing, right? What does that look like? Let's go back here. So expansion, consolidation, continuation. Does that make sense? And then we have another one. Where we go? Okay, right here. So here's a bearish example now, where you have Asia expanding to the downside, you have London retracing a bit and consolidating, and then you have New York continuing. This just happened on May 12th. And then here's the fifth one, which is consolidation, expansion, consolidation. And that would be this right here. Asia range, London expansion, New York consolidation, right? So right here, Asia consolidation, London expanding, New York consolidation. So this is that topic of conversation where we say the overnight session already moved 500 points, 600 points. What can we expect in those situations? Consolidation during New York. And maybe something good can happen during the PM session. Okay, so these are real examples. If we look at what happened today, let's just, you know what, because the day's pretty much done, I'm going to get rid of all my levels and everything. Let me go to my profile setting. And let's just see what today is, because it's not over yet. But you'll notice, or if you'll recall, earlier today in the in my daily trading thread, I said this right here. Not sure if this would happen, but it's just a projection. 10:05 in the morning. I was looking to see if it would get that sweep for me because I wanted to long. I said ideally the best scenario for me would be to long off of these lows here and then short from up here, right? Catch two trades, call it a day. Price, however, decided to not sweep this and ended up going higher, right? So in this scenario, what will we say this is? What type of profile do you think this would be? If we have expansion, consolidation, expansion, right? So it looks something like this, right? Asia expansion, London consolidation, New York continuation. So you see how, if I just zoom in on this a little bit, see how price for New York is going to dip into the EQ and then reverse and continue lower? That's what I was anticipating today. I was anticipating a move back to the EQ and then continuation. Now keep in mind, candle doesn't close until 5. Anything can happen to validate that. But if we go back to just this for a second, we can really see the expansion here, right? Why is this consolidation? To me, this is consolidation because you're not seeing any sort of key levels getting taken out during the London session. And you can see we have it's just kind of grinding, right? This is clear expansion, right? Just moving down. Now, the thing with how I'm marking these daily profiles, oh, no problem, Hard Bowler. Appreciate you, man. Appreciate you, brother. The thing with these types of ranges is, and I'll show you my settings, because you can do this too. You know, I'm just using that ICT kill zones and pivots. What I've done is I've set the start and the end for Asia to be from 6 p.m. till 2 in the morning. And then from 2 in the morning till 9:30 is London. And then from 9:30 to 5 is New York. So you block it up like this, and then you can really start to see how the profile works, right? So today, like I said, I was expecting expansion, consolidation, and then continuation. Whether it happens or not, it doesn't matter. It's all about just having some sort of a visual perspective on profiles that have typically played out. And I've showed you already a few examples on that screen. Now, I mean, here's another example. So let's look at this. This is yesterday. Asia is consolidating. London is manipulating. This is a classic buy day, right? Asia consolidating. London manipulates. New York reversal. That's this, right? Let's look at Wednesday. So, like, you know, on your side, a lot of people spend a lot of time backtesting models. But there's other things you can do. You can start to study concepts like this. These types of things are going to expand your trading IQ in a more general way. And it will ultimately result in you making better practical decisions in real time. Because you'll already have a plan going into the session that goes far beyond price just hitting a level, or I'm looking for an IFEG, or I'm looking for a unicorn. You have a much larger perspective. It's another reason why I still look for bias from the H4 and go through that type of process, right? It's an exercise. And I mentioned this in the previous live stream. I do it specifically just to get, the wheels turning in my head about what I'm looking for on the chart. It's like a warm-up, right? I said this before too. I'll say it again. It's like when you go to the gym. If you go to the gym, you don't just immediately start bench pressing. I don't know how much people are bench pressing, but like, let's just say 150 pounds. Like, no one's just immediately going to bench press 150 pounds, right? You're going to start with 50 pounds. Then you're going to add some more weight to it, right? Then you're going to add some more weight. That's why I do that type of, I take that analogy and I take it to trading, which is I show up to the chart, I go through my process, which is always the same. Let's go back. I'll just show you guys all over again, just so we can kind of close the loop. Always start the day looking at the economic calendar. Next thing I do is I start looking at higher time frame bias. This is that exercise I talk about, because I can now look to see what I did yesterday and see, did it play out? Because you want to know the other thing with this is, whenever I look at price and it does exactly what I was anticipating for it to do, what do you think that's doing? Yeah, it's a warm-up for sure with my eyes, training my eyes to see things, but it's also doing something else. It's giving me mindset confidence. I've already found a W for the day. It's not a W in the sense of money. It's a W in the sense of identifying what price was going to do. Do you think a lot of people can do this? Think about when you first started trading. Could you identify where price was going to go? No. You didn't, because I know I didn't. I had no idea that you could do this. I used to always wonder, how do people know where price is going to go? How do people know which level is going to work and which one is not going to work? A lot of people can't do this. So, Pelosi knew. Okay, well played, Hollis. Well played. You're smart, man. Well played. But my point is, I've already caught a W, and it's just by looking and saying, hey, I was projecting for price to go from here to here, and guess what? It did. There's my W. Now I'm going into the session already feeling confident from a mindset perspective. This whole thing is in the head, is in our mind. Like, you have to visualize the things that you want to have happen on the chart. I want to see clean IFEGs. Like, it's ingrained in my brain. When I was really studying and learning and practicing, like, that's all I could see was IFEGs. It didn't matter where I was. If I was at a family function, in my head, I just kept imagining a higher time frame level getting swept and a V-shaped IFEG with SMT, maybe inside of a higher time frame internal range liquidity pool. That's it. I just kept imagining that. You keep doing these things, your mind starts to already intuitively know when it's going to happen. And then what you're looking for becomes second nature. You're able to kind of execute much quicker. There's no second guessing. It takes time, takes sacrifice, takes practice, but it's all there. So once again, I'm doing this as a warm-up, because the next thing I'm doing after that is I'm going a little bit lower and I'm looking to see what levels of interest I now have. So this type of format, where I'm now identifying the levels, I'm saying, hey, if price goes here, I'm looking to short. If price goes here, I'm looking to short. If price goes here, I'm looking to long. If price goes here, I'm looking to long. This ties into the profile. I can look at this profile here, and I'll go back to this. Actually, let me go back to... So if I go back to today, let's just start from here, right? Because this is what it pretty much looked like, right? This is what I'm working with. So when I'm looking at this, I can start to see, okay, how many points did Asia move? 453 points. How many points did London move? 326 points. This looks like expansion. This looks like chop. And like, yeah, there was a little move here, but then we have chop, right? So this is showing us consolidation, right? Expansion, consolidation. Expansion, consolidation. I'm looking for NQ to have a move up and then a move down, right? I already know what I'm looking for. Price goes up, hits the EQ. So I already nailed that part just by using the profile. I was anticipating a move up. The thing is that just because I'm anticipating a move up, it still has to tie into my trading plan. And my trading plan, once again, and I'll just kind of end with this, is I needed to see this level get swept. It's actually an H4 level. I needed to see this level get swept. Let me go to the 15-minute. Okay? So even though I knew I wanted to see price go higher, in order for me to take that trade, I need to see this swept. So even though I know potentially it's going higher, if it doesn't sweep that, there's no trade. So get into the practice of doing these types of things, training yourself. The beauty of the profile is you have, what I'll do is, what I'm going to do, I actually wanted to rebake this, just kind of make it my own. And then I was going to share it. I have this kind of set up. What I'll do is I'll share a link to this in the Trading IQ. If you want a copy, I just don't want to share this guy's thing, but if you want a copy of this, just go to his Twitter. It's right here. Not, like I said, I'm not a gatekeeper of information. I love sharing things. I want you to have access to as many things as possible. Go check this guy out on Twitter. Search for narrative. This should come up. You might have to dig deep for it because it was from a while ago. But once you find it, you're going to be like, oh my God, there's some gold here. I'm going to try to put together my own thing. I think for me, like having these lines is one thing, but you got to see it with actual candlesticks to then truly be able to identify and interpret the theory of what search and destroy might actually look like, what a classic buy day might actually look like, right? What these other types of profiles or narratives look like. So I'll share a link to this. I'm going to continue working on this whiteboard, but then I'll share a link to it so then everybody will have access to it, and you can basically always refer back to it however you want, whenever you want. And like I said, the goal here is to plant some seeds for you and for you to either continue to study and learn, to maybe help unlock something with your own trading, or maybe it's just a good session for you to just go, hey, that was cool. All right. So whatever it is, I'm fine with it. The session's being recorded. I hope everything works out with the recording. There's no glitches. Otherwise, we'll have to run it back on Monday. But we'll keep looking at these daily profiles. I wanted to introduce it because I want to start incorporating it more in my analysis when I show up to the day inside of the daily thread. I want to incorporate it, especially when I'm looking at these levels of interest, because it's very important in how it ties in with these levels. Even if the setup doesn't happen, that's fine. It's about having some sort of a projection for the day is only going to help us as traders, right? It's just adding another, piece of ammo or some sort of utility to your utility belt. Anyone have any questions on any of this stuff? If you do, drop it in the chat. If you don't, I think we're going to end it there because it's been going on for about 2 hours. Yeah, hope everybody has a nice weekend. I really appreciate everybody sticking around today. Like honestly, I'm humbled that you guys are here. I'm humbled by anyone that listens to the replay, watches it. Honestly, I'm very humbled by it. And as always, like, I'm not asking anything of anybody. You know what I mean? If you want to help support me and just, say thank you in some other type of way, I just want to make sure you also get benefit from it. So I have affiliate links you can use. If anything catches your eye, you'll notice I don't have anything for prop firms. Maybe I should probably do that. But nonetheless, I'm not trying to spam anybody with anything. Like I said, I'm all for you guys getting to where, I want you guys to be, right? I want you guys to be at a profitable level. And if you're not profitable right now, then, I have even more work cut out for me because that inspires me even more to want to help. You know what I'm saying? So I really, really appreciate you guys. And the thing I'll also say is, like, I don't know how many people actually listen to this. I don't really look at the numbers or anything. There's about 20 people here. And, like, if you're here and you're getting something out of this, like, just remember this, like, it's for free. People charge so much money for shit and gatekeep, and I really don't like that. And it's not how I operate. It's not in my belief system. My belief system is to help people get to, these areas where I want them to, like, where I know they want to be, you know what I'm saying? And if I can help in any sort of way, like, I'll be right there. So if you want to DM me for help, you just do it. Like, just do it. Anyone that's already had DM conversations with me already know, like, I don't just give you back a one sentence answer. I probably send you so much shit. You're going to be like, can you stop talking to me now, Kira? You just overloading me. Like, will you shut up? So I don't hold back. I'm just going to give it all. Okay. So yeah, all this, peace out. Jackbit, peace out. Spaghetti, peace. Zanu, Sean, Bobby, Ali, good to see you, man. Hope you're well, brother. Another OG. SR, hit me up. Yep. I'll get back to you, brother. Nuno, appreciate you as well. Oh God, I didn't answer the 3-minute BPR question. Oh geez, my bad. That's a mistake. Sorry about that, brother. Got carried away with something else probably. So you said 1024, right? Okay, before we go, let me just talk on this. So I'm on the wrong day. Oh, appreciate you, Bobby. That's really nice, man. That's really nice of you to say. Thanks, Charlotte. Bjorn, welcome to the community, my friend. I've seen you in the premium side too, so welcome. Yeah. Hope you found some value out of this. Ali says I'm not lying. That's funny. Yeah, I know, Spaghetti. I've been on for too long, right? As you can tell, I'm passionate about this stuff. Okay, I feel really bad because I guess I didn't say anything about the 3-minute BPR. My bad. Let me just do it for you. We said 1024, right? 1024. Okay, right here. Okay, so your question was that why was this not a good setup, right? On the 3-minute. Okay. Oh, maybe that's why the FVG doesn't look normal. Okay, there we go. That looks better. Okay, 3-minute. Let's turn off these indicators and stuff. Okay, but that was your question, right? Why is it not a good setup? Or why didn't it work or something like that? So if you're looking at this, like I'm just looking at this right now with not knowing the levels. I haven't even gone anywhere. FEGs, nothing. This to me would be like a potential drawn liquidity play, right? So drawn liquidity meaning the daily EQ and the London high up here are the drawn liquidity. So if we can see good momentum rip through here, there's a good chance that potentially price is going to go up here. Now, why didn't this work? Well, it's no longer a BPR in my opinion, number one, because you didn't get that smooth, like you didn't get that smooth V shape, right? Right here. You didn't get that move. Number one. Number two, you then get chop. And what happens when you have chop like this is you can't trust this anymore. So even though you're on the right side of premium and discount, you can't necessarily trust this because remember one of the things we talked about? We talked about momentum. There's no momentum here. A V-shape is momentum. Like if this had ripped through here and closed above it, okay, that's a different story. Like you have momentum now. There's a potential drawn liquidity play. Sure. Is there SMT? Ah, there you go. Hardballer found it. Look at that. He hunted it down. He hunted it down. So you have SMT here with ES, but you still need that closure with that clean move, and you don't get it. And because you don't get it on that first try, you like for me when it comes to these continuation plays, I'm not the biggest fan of them personally, but one thing I do know for a fact is I love seeing SMT. I love seeing strong momentum confirming the IFVG, and then of course you want the drawn liquidity to be very close. So is the daily EQ technically a drawn liquidity? Yes, but the London high is a better drawn liquidity. So if this drawn liquidity, which is London, was lower, I would have liked it a lot more personally. But once again, this is why I wouldn't have taken this thing. There's no way I'm going long on something like this. I can identify things, show them like in my thread or whatever, but like it doesn't mean I'm going to take it. You know what I mean? I hope that helps, man. I'm trying my best to explain it, but I've been going on for like 2 hours, so my brain's starting to turn to mush. All right, so we'll end it there. I really appreciate everyone's time again. Honestly, I really do. God bless you guys. Have a great weekend. Make sure you take some time off the charts. Live life. If the weather's good by you, like honestly enjoy it because it's not warm for other people. I think only where I live in Toronto, Canada, it's only starting to get warm now. It's been like 5 degrees and raining, and now finally I think we've hit like 20 today. So I'm looking to get outside, have a drink, like of coffee. I don't drink anything, but coffee or maybe like some sparkling water. Enjoy the weather. But yeah, once again, God bless you guys. Peace.